Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Happy Monday to you.
We're
in
Monday.
November.
Yep. The first one in November.
Holiday shopping season. Where everybody takes their house off the market when they should be putting it on the market.
That is definitely the part of the issue, right? That we're going to see over here over the next couple months. So I'll tell you what, though, man, I've been very busy. I've been very blessed. I took a buyer out this weekend, shopping at some houses. You guys got them pre-approved for me last week, and we're out there shopping. And this is very anecdotal, but it's in Oviedo, right? Is where we're looking. And we had 9 houses on our list. 3 of them went under contract within 2 days of us putting them on the list.
You get those hot communities, man, and it's tough. It really is.
So I feel good that the market is at least moving. It's not super hot. We're not going crazy, but if you got a good house at the right price, it sells.
We're seeing more buyers jumping in too.
For sure.
I think once this government shutdown is over, I think people will feel a little bit more comfortable as well, because I do think that does have some impact on things.
I think it absolutely does. As a matter of fact, one of the questions I had for you today that was on my list of questions was, is this going to impact, if it keeps going like this, is this going to impact FHA, VA? I know we already talked about USDA is off the table right now. Is it going to start impacting closings, approvals, those kind of things? Or
that'll be interesting to see, because at Cross Country, we're just going ahead and funding them, knowing that the government's going to reopen and we'll just have them insured later. But if this just kept going and going and going, how long do you keep those mortgages that are literally uninsured and a client's making 1 or 2 payments on them? Mm-hmm. So that could be problematic. I'm optimistic to think that sooner or later, they're going to have to just acquiesce and figure out a way to get the government back in action.
I'll be shocked if it lasts another. I mean, a week I could see, 2 more weeks. That's going to be, I don't want to use the word devastating.
I'll tell you one thing. We go into the holiday season with no air traffic controllers, and you're going to see some people, you're going to see the government starting to do some things that might change it.
I'm heading to New York December 14th. I better make it.
You just might not make it back. You might be stuck in New York. God forbid. Oh my God. Oh my God. I'd rather be in Jamaica after a hurricane than stuck in New York. Come on.
I know. I'm going up there for a football game, man. I can't move it,
Yeah, no, you can move the football game. There you go. Yeah. All right. So I wanted to talk a little bit about really understanding the myth behind the message being rates were cut. And when the Fed does a Fed cut, we're getting phone calls all day long going, I heard the rates dropped a 1/4 point. Mm-hmm. So first of all, you and I have talked about this ad nauseum, but apparently we haven't talked about it enough, because still people don't quite understand. And what amazes me is how many real estate agents don't even understand. Absolutely. I mean, I got at least 3 calls last week going, wow, Bruce, you guys must be going crazy because interest rates dropped by a 1/4 point. And I said, Jerry, you do realize interest rates are up now? And he's, what are you talking about? Mm-hmm. Like, I'm from outer space. Like, I couldn't possibly have the right information. But I want to show you a chart. Now, keep in mind, this is the bond market. So in the bond market, we want this chart to be going up, not down. So the higher it goes, the better interest rates are. Mm-hmm. So the lower it goes, meaning interest rates are getting worse. And for every 100 points here would be 100 points to the discount point. So for every $100,000, 100 points, it costs you $1,000.
And when you say 100 points, I'm looking at the chart on the right there. It's really represented by 1, right? So from 98 to 99 is 1.
That'd be one. That'd be 1 full point, and that would be correct. So
that would be $1,000.
That'd be $1,000. So I want to go back in time, back to 2024. We had a 0.5 point cut was the first cut. And there you go. And we started to see things really deteriorate. And then we had another cut and they got even worse again. But then things started to get better on their own. Look at no government interference, no cuts, and things start to get better and better and better. Now, if we look at this space here, we saw a huge loss in the market. That was when the tariffs were announced that we're going to start imposing tariffs.
So
But then,
Bruce, you're not showing up on your screen. I know you're probably circling it with your mouse. So let's talk
okay,
about the timeline, right? So you're talking about between March and May, right? The April
yeah,
timeline where we have
yeah,
that red bar that goes straight down, right?
that's
That
correct.
was the tariffs getting implemented, and obviously that spooked the
Yeah, and you can't see this either, can you? You
see
see
anything moving. Yeah, it's okay.
okay,
So that point where I see right in the center where I see the red going straight down over
that's right,
a
right
couple
here.
of days, that is the Fed, or not the Fed, that is the tariffs being implemented and the market having a lot of fear, right?
That's correct.
Okay.
And
And
then
then
we,
from there, we've basically gotten better, even though we had a little downswing again, but
yep, it got
generally better.
better in May. It got better in May,
Mhm.
but there was some rocky news and then it got worse. Then it
Right.
started to get better. But if we look at between May and June, right here, it seemed to drop to a bottom here. And then things started to get better and they got better and better and better. And there were some ups and downs, but they
Sure.
got better all the way to September. And then you see that September mark over here,
So
north to south.
September is that yellow that's second from the
That's
left.
right. That's
Yeah.
right. And then as soon as they did the cut, look at rates went down or went up again. The
Right.
market went down,
Market went down.
rates went up. Then they started to get better on their own. You can see that sweep coming in here. Then
Mhm.
they did another Fed cut, and now we've lost ground again. So
Right.
every time we've seen that Fed cut, we start to see interest rates get a little bit worse. Now, does that mean every time they have a Fed cut, they're going to get worse? No. I think that things will get better as they start to just, we start to settle in. But why did interest rates get worse after this last Fed cut? And
Well, we
this is
talk
what
about
I
this
want
all
to
the
talk.
time, right? Doesn't it happen because the market starts anticipating the cut, and so it starts pricing it in ahead of time, and then when it comes, it's really no impact, if you will, right?
Very true. Very true. But there was a couple of major things that happened with this last Fed cut.
Yeah, let's talk about that.
So, first of all, we were expecting a cut by a quarter point and we got it. But we had what, a 94.5% chance that they were going to do another quarter point cut in December. So
Mhm.
the market built in for that. They already went, this is a 94%. This is a given. And
Right.
then Powell gets on and says, that's a foregone conclusion. I am not guaranteeing you any more cuts this year. After they told us we were going to definitely have them, it was on the books. Now he does a complete reversal.
Hmm.
And he says the word inflation. Inflation is the arch enemy of the bond market. So as soon as he said inflation and as soon as he said no guarantee, the market just lost control. And we started to see deterioration in the bond market, which
Hmm.
we lost about 30 points in one day in the bond market. 30 basis points cost you $300 per $100,000. Now, we saw a few days it got better and then a few days it got worse. But we're hanging down there right now at a ceiling of resistance that we don't want to dip below. So we need this thing to spring back in some fashion so we can get back up into improved rates, because we got down to an average rate nationally is 6.19. That's the lowest we've seen in a long time. So we were hoping to start to see the high fives, but we went the opposite
Yeah.
direction.
So I'm looking at December's Fed Watch, right? Now this is not, set in stone. This is a forecasting tool that you were just talking about. And that was showing 90% that we were going to get another quarter point. Now it's only 67%.
And the other day it was less than 30.
Yeah, it's 30% that we're going to be flat and 67% that we're going to lose or gain another quarter point better rate, right?
Yeah.
So, yeah, it's definitely changed quite a bit from just 2 weeks ago, right?
So
When it
I
was almost
believe
a
the
lot.
market makers, when they see that much uncertainty, they
Mhm.
don't know what the Fed's going to do. So now, what do? When things are uncertain, they hedge on the side of the market,
Right,
not on the side of you.
right.
So
Makes sense.
they're not going to throw billions of dollars into the market and go, I don't know what Powell's going to do. I'm going to go ahead and I'm going to bet against him because I don't think they have any sense of assurance that he's going to do one thing or another. He's a
Yeah,
wild card.
yeah.
So
Well, yeah. So, hey, here's again, go back to the good news, man. Good news is there's plenty of houses on the market. Buyers are, in spite of all this noise, buyers are out there buying houses.
buyers are buying houses. Buyers, I think this is a really a great opportunity for buyers. And you and I have been saying that ad nauseum. But the fact of the matter is, you show me another market where you got 3.5 homes on the market for every buyer and sellers are willing to make deals. And
Hmm.
they are making deals. Now, granted, you could find pockets of any area in the country that they're not going to make a deal because it's a red hot community
Absolutely.
and the house is going to sell in 3 days or
Mhm.
24 hours as soon as it hits the market. But your average community, I think, for most people, as long as you're not looking in the high end, I think that you're going to find some flexibility with sellers.
We're definitely finding flexibility with sellers, and I will say, I went and looked at 6 houses this weekend on Saturday with one of my buyers, and as we were out there looking, I think out of the six that we looked at, two of them were actually having an open house that day. And when I went in with the open house, there wasn't just one or two sets of people in there; there were five or six.
Yeah,
And
that's
so,
great.
you know,
Really good. That's a good sign in the market.
it is when you see people out there shopping, even if they're just looky loos, you see that many people shopping, there's buzz, right? Stuff's happening. So I feel really good. I think we're gonna finish off the year reasonably strong. And I definitely think 2026 is gonna be, I wouldn't call it a gangbusters year, but I think we're gonna have a really good year.
Well, I think we're going to have a whole lot better year. And I also believe that a lot of people that could be buyers right now are not looking at those opportunities. For instance, you and I did several seminars for Hometown Heroes. So
Mhm.
we could help more heroes, teachers, law enforcement, veterans, first responders. They haven't even peeled through half the money yet. They're about halfway through.
Which is amazing because if you remember right, 2 years ago when they initiated that program, it was gone in 30, 40 days.
It was done in 45 days, $100
45 days.
million, 100 million. Now we only have 50
We only
million.
have 50 and it's still, yeah.
But that's because it's limited to the heroes. So if you are a teacher, law enforcement, you work for a doctor's office, you're a doctor, you're a nurse, any healthcare, military, you are eligible for this program and you can get up to $35,000. Don't miss out on this opportunity. And if,
Absolutely.
if cash out of pocket is your primary issue, there are always ways. Like it's tougher if your debt ratio just doesn't qualify. Well, you can't just go out and get a raise.
Right.
If you're short of cash to close, that's the easiest fix. It's even easier than fixing credit. So cash to close, let's figure out a way. Let's get some money for down payment assistance. Let's borrow from the 401k. Let's get a gift from grandma and grandpa or mom and dad. And all of those things, they can be resolved with just a little effort.
There you go, man. There you
We
go.
can get you out of renting. You can stop that vicious cycle of renting that does absolutely nothing for your wealth. So, you want some help with that? You give Tom a call, give myself a call. We'll be happy to help you.
Yeah.
And that really is it in a nutshell.
As
All
always,
right.
I hope you have a great week and I'm sure we'll be working together soon.
I look forward to it. Thanks. Have
All
a
right.
good day.